Hey everybody, this is Lorillia. Welcome to another episode of the Never Lose a Deal podcast. This is the place for real estate investors who want to learn more about creative financing. So, welcome to the podcast. If you are watching me on YouTube, I'm also live streaming on YouTube as well. But I am also doing a podcast episode. So it's been a while since I've did a video. And so I thought I would start the month of August talking about creative financing. I know last month in the early part of the summer, I talked a lot about raising capital. Currently, right now, I have a live class that meets and it met for 4 weeks every other week, and we're currently going into the fourth week next week of the Raising Capital Summer Accelerator. But as this wraps up, I wanted to talk a lot about, for the next couple of episodes, about creative financing. And I want to talk about it to give you a perspective that may be different than what you are familiar with. So I'm never going to assume that you know who I am or my background. So I want to start there, but just bear with me. I'm going to get to the topic at hand. Um, Let me just say this: the internet is a very interesting place right now. Very interesting, and it became interesting, at least from my standpoint, during COVID. Um, Without putting my age out there, but understand I'm an elder stateswoman. Um, and with that being said, my presence on the different social media apps do not come from the standpoint of me trying to be an influencer or be the hot new online chick. Why do I even bring that up? The reason why I bring that up because I want you to get an idea of the content that I share with you all and understand um, it's always going to be, as my minister will say, it's going to be sound doctrine. It's not going to be salacious. It's not going to be something that's just going to tickle your ears. It's going to be from a perspective of my experience and what I currently do. It's not going to be a remix of somebody else's thing. And that's why I said the internet is an interesting place right now because I see a lot of mixed messages, and from people who reach out to me and send emails, you can tell they've just been all around the internet, kind of just listening to little sound bites. One may say, well, it's not because of the creator. And understand, when I came on the internet, creator was not even a term. Let me just say that creator, influencer, they were not even terms that were used. Without dating myself, when I came online, there was YouTube, there was Facebook, there was Twitter. Snapchat didn't exist, TikTok didn't exist, Instagram didn't exist. I can't think of anything else that kids use. So with that being said, those things didn't exist. And of course, influencer, creator, none of those things existed either. And I find that because we have this emergence of people who are dying to be an influencer, who are dying to be a creator, they are putting messages out there, at least in the space of financial services. I'm not talking about beauty, makeup, travel, whatever. I'm talking about financial services. They're putting messages out there that are harming individuals because I always say that the person who seeks the internet to get information is a newbie person. They're newbie. Very rarely will you catch an experienced person. For example, what I talk about with financial services, with funding and real estate, you're not going to find an experienced person who has did some things getting the core of their information from the internet. Now, do they watch YouTube? Of course, they listen to a few things, but they're not going to base their whole financial life around a video without reaching out to the person or deciding to make an investment to work with the person or what have you. But there is a segment of people who they rely on the internet. And like I said, with this emergence of the creator economy and the influencer economy, and people just want clicks and monetization, they're telling people whatever they want to hear. And a lot of it is salacious. A lot of it just tickles your ears. A lot of it keeps people in confusion, which is why people just never do anything. And that is why I'm saying my goal is to be a sounding board of sound doctrine when it comes to what I talk about. Everything that I talk about is based on my experience. I'm not doing a remix of someone else's video and giving my spin on it, and it's total confusion. Something came on my timeline on Instagram. I literally heard somebody say business credit funding. There's no such thing. Business funding has been around for ages. It ain't no new thing. It may be new to Instagram, it may be new to YouTube, but it ain't a new thing. And prior to your most famous business funding guru, who may have now remixed it and told you that business funding is credit repair and business credit cards, that is wrong. That's not what the financial services industry considers business funding. It's not business credit cards with credit repair. But that's not what this video is about. This video is about your real estate LLC and DSCR loans. And that is what I want to talk about. And I had to give that background information because I want to put a disclaimer out there. The information that I will share with you today will be based on my experience and the lenders that I work with. That is not general information. And the reason why I say it's not general information, once again, I'm going to give you another lesson. And understand, there are people, your most famous gurus, Instagrammers, influencers will come and watch these videos, even though the views will not be in the thousands, and they will study this material and they will remix it for it to sound salacious. But understand, when you come here, sound information, sound doctrine, which is why you can always tell a tree by the fruits it bear. You go here, I know I'm doing a podcast, but for those who are watching on YouTube, you can go right to, on my YouTube channel, see testimonials of real life people that I've worked with, even up into 2024. So this is not, they're old videos. They date back, I think, all the way to 2013, 10 years of different people I have worked with. So I say this to say, I'm not new to this online thing. I'm not new to working with people. I'm just a professional in the financial services industry that's sharing information and knowledge that can help you. For those who seek value in it, will watch, they may implement, they even may go as far as reaching out. But understand, there's nothing here I'm going to talk about that's going to be salacious. A lot of stuff may even irritate you because, like I said, the internet is an interesting place. And we have people who will have you thinking that all you have to do is click your heels 2 times and twist around, and voila, you can be a millionaire. And that has not worked for anyone. And those that it has worked for, 9 times out of 10, they may have actually visited a jail cell. So with that being said, your real estate LLC and DSCR loans. Before I get started, let's do a little background on what DSCR loans are, because the LLC part is very easy. Not going to do a deep dive on that. But DSCR is, and let me, once again, from my experience of what I do. When I work with real estate investors who are seeking DSCR loans, I always say I work with small balance commercial loans, because DSCR is a component of the commercial lending space. It is not residential. So the reason why I make that distinction is because there are a lot of people who are listening to residential mortgage people, which is why you will hear your most famous residential mortgage people saying, my mortgage number is 5, 6, 7, 8, 9, 10, A, B, C, D, E, F, G. And that's great because in the residential mortgage industry, you need to have certifications and all the other jazz to be able to do residential mortgages. That is not the case with commercial. And the reason why, and your most famous residential person won't tell you this, is because, like I said, the internet is a interesting place. So everyone wants to be Superman or Superwoman. The residential, I mean, the real estate industry of when it comes to commercial is primarily for people who are seasoned. They're seasoned investors. They've did some things. So they're not new. They're not like, oh, what's an interest rate? What's an amortization schedule? And how do I calculate the net operating income? And what's a cap rate? Like they're not those individuals. So I don't sit on no commercial, I mean no banking and insurance boards of any states. But understand that in the commercial industry, which is why you will see many commercial loan brokers who do it DSCR, they will let you know that these are the states they lend in. Why? Because every state has their, their rules and regulations for commercial brokers. With that being said, commercial lending in the scheme of real estate is not institutional money. And then also, it is not a government funded entity. Now, what do you mean by that, Lorillia? FHA, VA loans, USDA loans, you can literally go right on the government websites. They give you all the guidelines. Now, I understand that there's a generation of kids who don't read. But for those who still read, go to those websites. You can learn everything about FHA and VA loans and USDA loans. And so 9 times out of 10, every FHA lender is going to say the same thing. It don't change. FHA in Virginia is the same as FHA in Texas, the same as it is in New York, it's the same as it is in Georgia, it's the same as it is in Oregon. Doesn't change. The guidelines are the guidelines. But when you get into the commercial side of things, that's not the case. It is not a government-backed mortgage product. It comes from the space of very rich people who have pooled their money together and they've created a private equity firm, or it's just a pool of private investors who have decided that they want to, because they understand how money works and they know that they want their money to make more money. So they pool their money in and they say, hey, we're going to lend on some real estate deals. But you don't know that. You don't know that because the facade of it is that it's whatever, ABC lender, what have you. So you don't know the people behind it. Why do I tell you all this? Is because every commercial lender is different who provides DSCR loans. So your famous mortgage FHA guru is going to have you to think that, oh, this is the way we do things in the residential side. And then they want to kind of talk about commercial, and you can't. No commercial person can say this is the one way to do things. That is why I put the disclaimer on the beginning and said the information that I'm going to share for the next couple of episodes is going to be based on my experience, based on the lenders I work with. Because if you put 5 commercial lenders in a room, I mean, representatives, because I'm not a lender. I work with the lender. Do you want to call me a broker? No problem. But I don't work for a mortgage broker. That's a whole nother conversation. I'm gonna get to that. I work directly with the lender. You know, that private equity firm that got together with all these rich people and said we want to start doing DSCR loans, that the general public don't know that's how that works. That's who I'm working directly with. I'm not working with a mortgage broker who I became an affiliate for and they give me 200 and 300 or $500 or whatever. That's mostly what you see on the internet, which is why a lot of people will have you thinking that when it comes to DSCR, any type of mortgage product that is for investors, that it's all the same. And it's not. Like I said, you get 5 DSCR brokers as well as lenders. For those who like, I don't work with the broker, I won't work directly with the lender. Good luck. You put them all in the room, they're gonna have their own guidelines. How they decide on providing commercial loans to investors. They're going to have their own guidelines. They are not, it's not based on what the government says, like with FHA and VA or what have you. So, with that being said, be very cautious of when you meet someone who says they do investor loans and they say, this is the only way to do it. Already you discredit that person because the industry don't work like that. But I get it. Like I said, the internet's an interesting place. So you'll have people with their suits are shiny in their mind. I don't wear a shiny suit. I'm not a glammed up person. So if they have a bigger reach and they have bigger numbers, they'll have you believing one thing. And like I said, it leaves people in confusion. So, for those who literally want to be able to merge the two together, I gave you all that background information. 17 minutes, the clock says, is to give you some idea of how this works in the scheme of who I work with and the lenders I directly work with. I don't work with the mortgage broker who I became an affiliate for, and they tell me, well, this is what because most of the stuff online is like people are lead sources. So they like I said, I'm not a content creator. I create content, but I'm not a content creator. I know like I'm not an influencer. So I don't have like I'm not trying to get a whole bunch of big numbers to be able to lead people to slaughter. That's not what I do. So I say all that to say DSCR, because I'm gonna talk about that first, is based on the lender's lend box. What is it that the lender is looking for? I'm going to talk about 3 things. What are they lending on? With the DSCR, what are their requirements? You need to know that, because this is what I've noticed with the newbie investor. Yes, DSCR, they're going to look at the economics of the property, meaning what is the net income minus expenses, and then you get the DSCR calculation. Where does this lender need to be? Now, that is why all over the internet you can find a gazillion DSCR calculators, because the experienced investor is usually going to run their numbers. Like they're looking at deals, whether it's on the MLS or whether it's off the MLS. They're looking on, they're looking at deals, they're calculating the numbers that work for them. They may even hypothetically put in an interest rate. Oh, if I was to get this interest rate, 7.5%, and all this other stuff, you can run all those numbers yourself. And then you can, you can get the taxes yourself, especially if you're an experienced person. You could call your insurance agent. You can ask them, hey, I'm looking at this. What would the insurance run me? All these things you can get yourself. So you can run your own numbers, which is why like I said, there's calculators everywhere. Once you've did all that and you're at it, now you just need to find out, okay, will this DSCR lender lend on anything below a certain amount? There are lenders that I work with DSCR. They won't lend below a 1.5. They won't lend below a 1.75. I've even seen some who are lending at 0.75. That's below 1.0. And I know people are like, no, 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 no. Hey, like I said, I don't know what type of returns they offer to their private lenders who are backing their money. Because, like I said, it's private equity, but they have gone as low as 0.75% on a DSCR property that is getting financed. So I say all that to say the newbie investor doesn't even know that, because this is what's not going to happen. Your residential person, and this is what I find, is that newbie individuals who've never brought anything, they need a lot of hand holding. And I say this with the utmost respect. Man, those people who are doing first time home buyers, seminars, online, offline, or what have you, I tip my hat to them. And because there's a lot of hand holding that has to be done for the newbie person. And be thankful that you have these individuals. Now, I'm not here to you co-sign on how good they are, but to just be able to be that sounding board to share with you strategies and insight and understanding of how real estate works. Because a lot of times these first time home buyer seminars, you have the realtor talking, and then you have the mortgage person talking. And how do I know? Because once upon a time, many moons ago, I used to go to them. In the early 2000s, when I was new to real estate, I would go. And that's why I said, man, like I said, I'm not going to talk about the quality of them, but these people are putting in their work. So they're doing a lot of hand holding. You get the hand holding from the agent, you get the hand holding maybe from the mortgage person. And so you get a level of comfort. You're not going to get that in the commercial space. So what I find is that you have this budding newbie investor who has been sensationalized by what they've heard on the internet. They've been on every webinar, they've been in every challenge, they got all this information, and now they can't they can't understand how to go from A to B. I don't mean to laugh, but it's just like it's so much convoluted information. And that's why so many people never be able to make any movement, because the information be so convoluted. So what happens is the poor, and when I say poor, I don't mean finance, but I'm just saying, just like the distraught, I should use, real estate investor who is new is thinking that the commercial side of real estate is mirrored like the residential side, where they're going to get the hand holding and the workshops and the care that they're going to get on the residential side. That's not the case. And that's why they don't know how to move forward, because on the residential side, with all that care, and because at the end of the day, it's a lead generation tool. And so the goal is to get those people who attend those meetings to get some real estate. So that agent who's working with that mortgage broker, their goal is for that person who attended that home buying seminar, is to get them pre-qualified. So now, once they're pre-qualified, now that agent can say, yes, let's get some time together. I got my mortgage guy here. He pre-qualified you, guy or girl. And now let's go look at some properties. That don't happen on the commercial side. So you have the newbie investor who's like, I want to buy a multifamily. And it'll just, with me, it's just gonna go like that, and I'm just listening. And then when it's silence, it's like, "Oh, well, are you kinda gonna help me how to do it?" No, that's not how this goes. No, because the experienced person is gonna just rattle off the numbers. They're going You don't get a pre-approval letter when you're trying to get some DSCR loan. You get a term sheet. The term sheet is derived. So that's why I said, let's talk about DSCR. You're gonna get a term sheet, but that's gonna be based on you knowing the economics of the deal. Because the first thing that I'm gonna ask you for that person who's like, oh, I want to invest in a multifamily. Once it's silence, I may break and say, okay, well, tell me something about the deal. Oh, I don't have no information on the deal. How do you not have no information? You ain't looked at no property. You ain't ran no numbers. Oh, I just want to know if I can get the funding. That's what they tell y'all. Try to go get the funding. Okay. Well, good luck. When you find some numbers on it, get back to me. So the first thing with DSCR loans is know your numbers. Know your numbers, know how to analyze the deal. This is not residential. No one's going to run numbers for you. That is why, and this is my commercial, is I have the consulting side and then I have you just want to get a loan side. The consulting side, it's my opportunity. If you and I work together, that now I can go over those things. We could do deep dives on all funding, financing, creative financing matters when it comes to real estate. And the goal is to be able to execute. That's why all those testimonials, the reason why there's fruit from the tree that I have is because there's real work being done. It's not salacious, like, let's get you some funding. That's why I said I'm not the person to just get you, when it comes to business funding, just get you some credit cards. Like, that's not the goal. And it's not going to be the goal when you, once again, it's the person who is going to sell you some business credit cards and then they're going to get you started in real estate. Two different things. But that's not what I'm here for. So when I say DSCR, know the economics of your deal. Know the economics. It's not like residential. No one's going to give you a pre-qualification letter. No one is going to give you a pre-approval letter. You need to know your numbers. You need to know what the lender's lend box is. If you don't, a lot of times, they may just give you an idea, hey, go to this website so you can learn a little. If they tell you in person, hey, we do DSCR loans, we don't lend under this. The assumption is that you kind of would know what a DSR ratio is. Like, I was talking to a local investor and she knew those numbers. Like she knew, like, I'm looking at this property, the DSCR is this, the rents is that. Like she knew the numbers. Like, it wasn't like, I just want to invest in multifamilies. That's really what people are doing now. Like I said, they've been to all the masterminds and the DS. I mean, what's the things called, the challenges or whatever, they can't bring together. So number one, know the economics of the deal. Number two, know your lender's lend box. How are they? Well, how what is the DSCR ratio they need to be at for them to lend to you. And then also, once again, with all DSCR lenders are different. I know for me, I work with some that are heavy on just the economics of the deal. And when it comes, and that, let me just say this, because the conversation of credit comes up. Every DSCR lender is going to be different. There are some that I work on that are heavy on credit in regards to, not in the scheme of, if you know where I stand when I talk about business funding, not in that scheme, But in terms of, because it has nothing to do with, oh, what the score has to be, on the residential side, you got FHA, and the FHA person will say you need to be at this interest rate. I mean, this credit score, what have you. On the commercial side, is more so to get a gauge of how you manage things. You know, are you a credit risk? It's not based on what the score, even though the score is a measurement tool, because there has been some cases where I've seen people who have been in the low sixes and they still were able to get the loan, because of the credit risk. The credit risk was not they just stopped paying their credit cards or they let them all default. Um, I was just recently, working on a file, and this particular real estate investor, because they were so busy, they just forgot to pay the bill. Like, it wasn't that they didn't have the money. Like, they had the money. They had the money to pay the credit card bills, but they were so busy they didn't have things on auto pay, and they just forgot. Although their score was in the low sixes, they were still able to get, funded. So be very careful of a DSCR like you're talking to somebody and they're saying, well, we got to be at this score. Ask them, what does that score really entail? Because it could be based on, every lender is different. Depending on the severity of the credit, if they are the sixes, I know, okay, this DSCR lender, nah, they tight. Like, they want 680 or higher. They don't want no blemishes. They want to see that you are financially sound, not a credit risk. But then there are some that's like, we want to get a gauge, but it's not our final say, because we want a story behind the credit. And so I know that if I'm working with um, a client to get them funding for a DSCR loan, I'm not going to present the file to get a term sheet from the one that I know is stringent on credit. I'm going to go to the one that I know, okay, they want to know the story behind it. Okay, what's the story behind this? And then I can explain it, I can give it some color. That's the advantage of working with someone like myself who can directly go to the lender, because every lender is different. So let's rattle off the three things when it comes to DSCR. Know the economics of the deal. No one's going to sit down with you and do those things yourself. There's tons of DSCR calculators online. You do a Google search, you'll find tons of it. Because once again, the assumption is you are experienced. And there's some lenders that they experience doesn't matter with DSCR. Let me just say that, because it is based on the economics of the deal. But you don't want to be that person who's like, I don't know what to do. I want to invest in a multifamily, but I don't know what's next, because that's not a lender's role. Like, lenders do not, and I tell people this, and they don't get paid, whether it's residential or commercial, but you get a little more comfort with a resident, but they're not going to sit down and do deep dives with you on analyzing properties. And I think at least on the internet, not in the internet, there's this assumption that grown people think another grown person is going to literally sit down and have them to analyze deals for them for free with no respect of time. They don't even expect that from the person who's doing the challenge. You sit in somebody's challenge for 5 days a week, or you on a master class. They done gave you all this game. You done looked at their shiny suit and and a hot car, and you can't get them on the phone to do a deep dive on a deal. Oh well. So don't be that person that is seeking someone to unearth the information you got on the internet. So that's why I said, know the economics of your deal. Know the economics of the deal. Number two, know the lending's lend box. How, if you were to work with this particular lender, what are they looking for? And then what did I say number three was? I done totally forgot. I totally forgot what number three is. But if you listen to me a few minutes ago, I said that. Now let's talk about the LLC, because I don't want to leave you. I'm already 35 minutes in. But like I said, I took a little break in July, so I'm back in August, so I got a lot to unearth. The LLC is the easiest part. I hate the Busher bubble. That's why I left it for last, because here on the internet, Lord knows people love their LLCs. They love their LLCs. I'm not here to give you any advice on tax structure, legal structure, asset protection, or what have you. But let's just say your LLC does not determine if you are going to get financed. Let's just say that. So that's just something that needs to get done, which can really just be done in a matter of a day. You getting an LLC, having your operating agreement put together, but it has no bearing on you getting the finance. So be very careful of people who put heavy emphasis on LLCs. There ain't no like I said, I'm only gonna go by the ones I work with, who said we ain't gonna lend on this because the person don't have an LLC. Like that don't happen. But like I said, the way they remix and spin stuff on the internet and will have your head on a swivel, they literally will have your head on a swivel. There'll be people spending a whole bunch of time on the LLC, but they don't know no economics of their deal. Like, okay, you got your LLC, but you don't even know how to economically look at your deal. Like, all you know is, I want to invest in multifamilies. And I was told I could get a DSCR loan. Now, help me put it together. Good luck. But like I said, for those who need help with that, I am here. But understand that does not mean that it is going to be done for free. So the LLC is the easiest part. Like I said, I know on the internet we love our LLC, especially here on YouTube. People will have you thinking the LLC is going to get you financing, but I'm not going to go down that rabbit hole. I could do a whole show on the LLC stuff. But once again, your lender will let you know at what point, should you start working on the LLC. Like you can have it done before, you can get it done during, but at the end of the day, it's not going to have a say on the financing. It's only going to have a say if you, and let me clear that up. Okay, all jokes aside, I know I've had some fun. If you're going to have different people a part of it, because now, of course, a lender needs to know, okay, the person you got 4 people in the LLC, but the finance, like those things are necessary in terms of the amount of people who are involved. But and that's why I said, let me clear that up. I know I was having some fun there. I'm talking about the LLC for one person who is seeking to get the DSCR loan. When there are multiple people involved, yes, that needs to be disclosed to the lender, because now they need to know. It becomes, number one, there's a liability issue, and also they trying to protect their money. Like, let's be real. They want to know from a legal standpoint, in terms of title and all this other stuff and financing, who are the parties involved. So, like I said, I know I did have a little fun right there, but yes, that needs to be disclosed. But understanding the scope of this video, we're talking about one LLC for one person. Like I said, I'm not going to no tax structure, single member LLC, and all this other stuff. I'm just talking about the one LLC for the one person. Now, of course, when it's multiple people, that's a whole nother animal. And it goes back to knowing your lender's lend box. You need to know what is their treatment, and how do they look at financing DSCR loans, knowing that there are multiple people in the LLC. Once again, gonna go by what I do. how I work with people. Lenders I work with, they need to know that. Like I said, I do sound doctrine when it comes here financing. I'm not here to try to help you trick the bank, to run a play. That's not what I do. I like freedom. I'm not looking to go to jail over peanuts. So I know when I work with people, I want everything fully disclosed. I'm not, like I said, and for those who are seeking people to work with in terms of the lenders, know what they want. Don't let it be a surprise. Like all this time you've been telling them that you have them thinking it's just you and you doing the investing, but knowing that it's three or four other people involved or another person. Let them know husband and wife deal, two partners, three partners. Let them go or let them know. So, like I said, I know I really talked a lot in this video, but like I said, coming off of taking a break in July, still in third quarter, want to go strong. Going to be talking a lot about these commercial lending products and how it can help you. And once again, like I said, when it comes to this DSCR, no doc, bank statement loans, these are all the things that I'm going to talk about. Every lender is different. So I know your most famous mortgage person is going to have you to think that is only one way to skin a cat, but that it's only on the residential side. That's not how commercial works. That it's all different. Even for myself, there is a call that I get on, and because like I said, I'm not no influencer, so this is how the things I do, and it's a call that I get on once a week where there are lenders all across the country, banks, lenders, or whatever. They're looking to work with individuals like myself to be able to provide business to them. So that's why you may have heard me say, especially if you're on my email communication list, that banks are still lending, lenders are still lending. I don't really get caught up into what other people are doing because everybody's experience is different. I can only tell you what I know. So I don't see things letting up. I'm almost surprised that the amount of creativity with these lending products. Like, I mean, I imagine getting started in real estate in early of 2008, but we all know that them type of loans was like crazy, but that was really on a residential side. Commercial, I didn't even have the bandwidth for that, so I don't know what was out there in the commercial space back in early 2000s. I only know what was going on in the residential side because that's when I got started in real estate, and it was like the wild wild west with the hedge funds and the ninja loans, no income, no job, or what have you, no assets. Um, but um, but there are opportunities out there for investors who really want to get started in the multifamily space on how to do it. Like I said, that's only for this video. I'm going to talk about other opportunities for you to do something. But at the end of the day, I can't emphasize enough on when you decide to move from, because this is not said enough. When you decide to put the hat on and say, I'm an investor, understand, don't look for the privileges and I mean, I don't want to say the guidance of the residential world. Because I have talked to people and they are new to real estate, and I've always said to them, because it's not a money grab for me. Why are you starting here? If you've never bought anything in real estate, why are you starting here? Because for some people, they need the FHA, like the whole 3 to 5%. They need that. And like I said, I can go really deep on the DSCR, but the one thing that I didn't talk about, and I should have, um, is the LTV. Um, that goes back to, and I didn't really expand because like I said, I could go so deep on this subject, but I'm just going to do a separate video on just the lender's lend box. Like, okay, what are they lending on? I talked about the DSCR because they had to do with the economics of the deal, but then what's the LTV? Are they doing 80%, 85%? 70%, 90%, because understand there's a larger amount of money you have to put down on a deal. So going back to when I talk to some people and they're new to real estate, I'm like, well, why would you start here? Because for some people, doing FHA, putting the 2.5 or the 3%, like I said, I'm not in that space, but may be better because at the end of the day, you're doing this long term. So it's a long-term investment. And I think for some people, they're trying to start so big. And then they get shell shocked when once again they're not getting the hand holding. Then number two, yeah, there's a sizable down payment, and I get sizable is relative, but it's not the 2.5%. So let's just like take, and I know I'm 45 minutes in, shame on me. But let's just take like in my market, here in the Northeast, like I mean, a multifamily, let's say four family. I mean, that can go for $500,000. So 500,000, I'm gonna be on the light end, and you have to come up with 25%. That's $100,000. 100,000 on a four family, multifamily here in New Jersey, the northern part, between northern and central part of New Jersey. 500, $500,000 home, 137,000. This, and I don't say this to, have people to get, I ain't trying to make your dream small or whatever. But no, like this is a big boy and a big girl play. Yes, 25%, 100K. Yes, that's what's expected. That's what the lender is looking for you to come up with. So you may be better going FHA, and let's do the same thing with 2.5%. FHA people, please don't castrate me because this ain't my space. So, I'm roughly doing it, but 550,000, 2.5%, that's 13,000. Once again, the economics of the deal. Putting out 13 versus 137. So once again, the salacious, the salacious talk online. You got people who will tell you do no dot, do it DS, but they're not talking about that part. Because once again, no commercial lender is going to sit down and expect it and try to deep dive with you on that. So for some people, and I've had calls with people, I don't do any free calls no more, but I've had calls with people and I know they got baby breath. They're new, but they want to get started in real estate. Get an FHA loan. Don't let this internet put your head on a swivel and have you biting off more than you can chew. If you know you can't come up, you trying to invest in that four family home. That's very common here in the Northeast. You gonna live in one unit, you gonna rent out the other three, you done house hacked, you done did all that stuff they told you to do. And now when it comes to the lending side, you shocked because you were sold on getting a DSCR loan and you didn't know that you had to come up with 25%. And that's honey, and like I said, I don't even do FHA. So this video is not to sell you on FHA because I don't do it. Now all day long, like I said, I'm your person when it comes to investor loans. I am your person. We can talk, but don't be shell shocked when you hear that, because that's the part that people are not telling people when it comes to these online challenges, master classes, virtuals, or what have you. Because a lot of times the people you're listening to now, they can come up with 100K with no problem. But then you, my friend, get shell shocked, and then you thinking something is wrong. Like, no, it's no way. Yes, way. Yes, yes. The lender's looking for you to come up with money. The DSCR loan, yes. And like I said, I can spend an hour just talking about the economics of that. And I lightly touched on it. I really just touched on the DSCR ratio because there's people who don't even know that. And that's why I said, although this could be an advanced topic, um, a lot of times the individuals who are advanced, they're not coming to these platforms to get, you know, should I say, um, knowledge from that standpoint. Insight, yeah, but not knowledge. But there are a group of people that's truly trying to get knowledge, and that's why I said I'm going to tell you it, straight from the hip. And this is based on what I see. Like I said, you may talk to another DSCR lender and they don't want you to put 25%. Know their lending box, but it's very common. Like the LTV, 70%, 75, 85. Oh, well, I know one is 90, only 90%. I mean, 90% is all I have to come up with 10. Okay, let's use that. The 500,000, you got to come up with 10, that's 50. That's much different and still what that FHA is talking. So that's my goal, going forward, and that's what this podcast and this video is about. The content that I am going to share with you all. Real life, nothing salacious, nothing for clickbait. Real life strategies on from a creative standpoint that I do. That's why I said I stand by the information I have. Like I don't have to remix nobody's information. I've been doing this a long time. I know for my podcast listeners, you're not on YouTube, but if you go to my YouTube channel, believe you me, my catalog is stacked. And that is not even including things that I did offline that has never seen the light of day here on the internet. So understand, I don't talk from a place of theory. I do this stuff in real life. It's not salacious, it's not what people want to hear, but it's real life. Because like I said, I think a lot of people, especially people who look like us, are losing when it comes to the wealth gain with real estate, because at least here on the internet, the information is not truthful. And I'm not going to say I'm the only truth bearer, but it's it wakes people up, and some may want to hear it, and others believe that, well, nah, there's an easier way, and by all means, you have a choice. But once again, this is Lorillia. First time I did 50 minutes of a podcast episode, but like I said, I had so much to unpack. I love doing this stuff. Like this is what I like to do. Nothing salacious, just real content. But for those who would like to work with me, like I said, let me give you an idea of how this will work when it comes to the online work. If you are looking to work with me and would like to get financing in the investor space, like I said, I don't do nothing residential, so I'm not in FHA or VA or USDA loans, but I do primarily investor loans. Understand that you can go to my website, www.neverloseadeal.com. There you're on my email communication list, but on there's a Calendly link. That link is not going to be for us to talk, but it will be for somebody that I on my team that I work with, who will reach out to you and learn more about you and see how we can get you financing for your next deal. This process is going to change. I'm going to literally have a website just for the lending side, but that's not in place. So depending on when you watch this video, you may only see one link, but other than that, it will guide you to the right place. But just want to be clear that that Calendly link is not for us to get on the phone and talk about your deal. It's just for, like I said, my assistant to reach out to you, learn some more about the deal you're working on, and to get you financing for it in the next step, so we can get you a term sheet in the next 24 to 48 hours. Until the next time, this is Lorillia, and thank you for joining me for today's episode. Bye-bye.